Getting into the week, hello and welcome to a fresh new edition of Bazaar Morning Call. It's a Tuesday morning. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, hi, good morning.
Hi, morning.
Things are looking a little down and out once again as we start this session. Nasdaq is down about 1%. These are cues we are waking up to. We have the dollar index, which is rebounding. That's a unfortunate outcome, but it's up 1%. You want it down, not up, but it's back at almost 108. And oil, actually, that is the big story. It saw a large drop and a big rebound as well, but essentially it ended flat. So SGX Nifty, reacting to all of it, which is up about 50 odd points, 18,255. That's about a 0.25% higher. Yesterday was a poor session. The market did drop. Today it's indicating that at least right at the word go, it's going to be a higher start. Will gain stick? What's the trading strategy? That's the point of discussion here as always over the next 60 minutes or so to market opening. Guys, hi.
Hi, morning Prashant, morning Nigel. And there are some headwinds on the horizon, right, which is keeping the market from hitting those all-time highs. You can see it on the screen. There was the first COVID death that we saw in China as well. Demand is getting hit there. And for our own markets, it's reflecting that. Markets have been down for the third straight day yesterday. The Nifty slipped below that 18,200 mark. But the big headline globally is what's happening with crude. And although it is important from an oil importer standpoint, it just goes to show that there are huge demand concerns, specifically because of what's happening in China. And that's put pressure on prices, $87 a barrel on crude. So now it's a fall of 12% in the past 11 days on Brent crude. And that's not a small fall. It is a pretty steep fall in such a short span. It's also because, of what's happening in China. As I said, Beijing has now shut shops, they've shut schools after the COVID death. That has raised concerns about demand as well. And there are some talks of the OPEC perhaps discussing an output increase, which they have put on hold as of now. So those reports have been put on the back burner. But nevertheless, this is the way the crude game is moving because of that, because of all this news flow. It's also the second straight day of FI selling in our own markets. So just keep that in mind as well. FI sold about 1,590 crores. So I think it's still a way off before we get to those all-time highs, about 400-500 points away. There is, of course, this global hurdle. There's the fall in crude that we're seeing. And all of this, maybe we'll have to buy a little more time before all-time highs.
All-time highs, but also be mindful of the downsides, Sonia, because, the texture has deteriorated a little bit over the last couple of sessions. But I'll start with oil because, the closing is not the story, and it's actually an incredible story, but a fall story at that. What I'm referring to, I'm talking about the Wall Street Journal article last night, which basically said that OPEC Plus is going to increase output. That seemed odd and strange because all this year, OPEC Plus has been sort of talking about cutting output. They have cut output. And here's a story which said, well, they're going to increase output. Oil prices fell $5. At least I woke up this morning. I saw that story last. Oil was down $5. I woke up this morning. It had gone up $5, recovered $5 because Saudi Arabia, which is an OPEC member, one of the largest, the most powerful, said, well, it's false. There's no plan to increase output. That's the swing we're talking about. And that's oil, Brent oil futures we're talking about. So which is back at 88. We would have liked it at 82, which was approximately the low. That would have been a big thing, but it's not. It's back at about 88 where it was yesterday. The dollar is the other one, right? It's not staying down. You want it weak, but it's coming back up. It was up about 0.9%. It's back at 108. For the bearish trend in the dollar to kind of sustain, which is the kind of outcome we want, technically speaking, the index must stay below 109.29 kind of area. So we are, under it right now, but let's see if we're able to stay under it. Now, straight to the market here, the Nifty's 20-day moving average is at 18,079. With the open, it puts more distance between where the Nifty will be, today's open, and where the 20-day moving average is. But, to my mind, now that is the support, which you need to kind of watch out for as you go along. On the Bank Nifty is still above the swing low of 41,965. This is the level I put out yesterday as well. We almost got to it, and then we kind of bounced off it. The 20-day on the Nifty Bank is at 41,662. So again, about 1,000 points away. Banks, of course, have been the stronger part of the market, and within banks, it's PSU banks, right? You had Union Bank, Canada, Bank of India, all up between 5 and 10, 12% yesterday as well. Broader markets are under pressure too. And just to use the example of the Nifty 500 index, that yesterday closed below its own 20-day moving average. these are short-term, meaningful reversal levels up and down, but the Nifty 500 closed below its 20-day moving average in trade yesterday. So, I mean, this is a point we've been making the last couple of sessions. The texture at the margin has been changing a little bit. The alternate thought process is that the market kind of sucks everybody in to say, well, you know, this is it. There is hesitation. Maybe the market pulls back and goes down a little bit. And then, well, everyone is into that thought process. I mean, it makes a dash higher. We'll see. It's still early days. It's just been, 4 or 5 days that we've come within 1% of this all-time high. And then the hesitation started. So I think today will be important in that day. How does the market react to what are essentially not very positive global cues, with the dollar higher and US lower once again? Nigel, what are you watching?
Well, what about the morning in Mumbai? Beautiful, right? Lovely weather early this morning. I mean, besides the queues.
Last few days, the weather has improved. There's a nip in the air, right?
It's amazing. And the FIs, I think they've already gone on vacation, just going by their volumes. But let's focus on the queues this morning. Well, the uptrend on the Nifty, that's intact. But the broader markets, they need to catch up, because portfolios, they look good when the broader markets do participate. And we're down for the third straight session, but I'm not so worried, because the uptrend on the Nifty continues to remain intact. Yesterday, the problem was we didn't see any recovery. We're so used to seeing an intraday recovery. And the institutions, they turn net sellers. So I look at both those two numbers together. That's the FI and the DI numbers together. But further looking into it, the gross volumes on the FIs, well, they were 40% lower in comparison to what we have seen on an average in November itself. For the sixth straight session as well, the breadth of the market was in favor of the declines. And that's a little bit worrying, because, you know, we haven't had more number of advances in comparison to declines all the way since November 11th. And you'll want that to, at some point of time, you have a couple of days at least where you have more number of stocks advancing than declining. You'll see that chart comes up for you on the screen. What are the FIs doing in the F&O market? They unwound some long positioning. So lower participation in cash market and unwinding of long position is what we saw from the FIs in trade. And that's why we did end lower. The problem is they're writing calls aggressively. Yesterday as well, 50,000 call contracts is what they wrote in the ratio of around 3:1. And it appears there was big open interest built up at around 18,200 call, at around 18,300 call, close to around 1 crore shares added between both those two strikes. And the put writing we were seeing at around 18,300. That's moved down to around 18,100. So plugging in these numbers then, the near-term resistance, well, that's around 18,300 to around 18,350, going by the call writing that we've seen. And on the downside, since we're seeing 18,100 puts, see a good amount of open interest built up, well, that 18,050, which coincides with the 20 DMA, becomes a crucial support zone. For the time being, SGX Nifty suggesting a bit of an uptake of around 50 points. I think if you get a bit of a dip today, yet again, the uptrend is intact. 18,050 odd, 18,100, that'll be good entry barriers if you get there.
Okay, so we'll watch out for those key levels. But for now, the SGX Nifty is quiet, actually, not doing too much this morning, up about 23 odd points. But a lot of stocks in focus, so let's get straight to that. First up, we have some opinion coming up for you from Sunil Kaul of Goldman Sachs, who says that as 2023 unfolds, they think Indian equities are less likely to outperform for the third successive year, as China and other globally cyclical North Asian markets, notably Korea, could perform better on China reopening catalysts and global recovery expectations in 2024. While they remain bullish on India's long-term prospects, high starting valuations and near-term cyclical considerations prompt a market-weight stance to start the year. They remain overweight on banks, insurers and investment cyclicals like industrials, cement funded by infotech, NBFCs, durables and utilities.
Well, this is a view on money markets and the rupee. HDFC Bank's Bhaskar Panda says US markets were stable as some of the central bankers are calling for smaller rate hikes. Meanwhile, oil had a roller coaster day yesterday on the basis of news flow from Saudi Arabia and China's COVID-related curbs. The markets will be looking out for FOMC minutes for cues. According to him, the dollar-INR pair is expected to remain range-bound given the overseas backdrop and is expected to trade in a range of between 81.65 to 81.85 with the dollar.
And on the bonds, Bhaskar Panda says the yields in India have been hovering in tight ranges and will continue to remain range-bound. He expects a 10-year benchmark yield to trade in a range between 7.3 to 7.35%.
Well, we have a lot of stock-specific action to track for you today, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Nykaa, GSPL, Gale, Idico Remedies, JK Paper, JSPL, Root Mobile, and Jubilant Foodworks. They are stocks on the back of positive news flow. While you also have Delivery, Hindustan Copper, they are stocks that are likely to open up in the red.
All right, so that's basically what's coming up. Now, some important opinion. This is coming in from the Cleveland Fed President, Loretta Mester. She says Fed is nearing a slowdown in the pace of rate hikes, but she added that more positive data is needed on the inflation front to ensure returning to price stability. Listen in.
At a point where we're going to enter a restrictive stance of policy. And at that point, I think it makes sense that we can slow down a bit the rate of pace, or the pace of increases. We're still going to have to raise the funds rate. But we're at a reasonable point now where we can then sort of now be very deliberate in setting monetary policy to get back to price stability and be more judicious in balancing the risks so as to minimize the pain of that journey back to price stability. And so that's how I see the next phase of policy. So I don't think we're anywhere near to stopping, though, in terms of, you would phrase the question like slowing and then eventually pausing. We need to see inflation really on a sustainable downward path back to 2%. I do think we have to get into restrictive territory. My view is that we're just basically entering restrictive territory. And then we'll have to see, right? So we need to bring rates up further, I believe. And we said that in our last FOMC statement at our last meeting in early November, that we expected the Fed funds rate will have to move up further. But then we have to be judicious about sort of evaluating and letting the economy tell us, you know, is inflation indeed moving down in a timely way, or do we have to even move rates higher, and where will that be? So we don't want to just be basing policy on lag data. We really want to be forward-looking, and that's why having our Fed banks distributed across the country is really important.
Okay, and you know, they keep talking, right? The different speakers, Fed speakers, and a lot of opinion there. Dean Kim is head of global research product at William O'Neill and Company. He's joining us right now. Dean, great to have you with us here. Thank you very much for your time. How are things looking? Are they muddied a bit more as we approach the end of the year? Because volumes globally have also dropped off. In the US, for example, this week there's this Thanksgiving holiday. Volumes were low. You know, this pullback rallies seems to be fizzling out. Equities are down, rates are up, and you've got the you know, dollar, which is higher as well. What's your sense?
Yeah, I mean, you know, it's interesting. We've heard the Fed speaker just now, and you know, economic data is everything. So we had a good reaction to lower than expected October CPI reading on November 10. And so the S&P 500 reacted really well in the print, and the index continues to find support at the 100-day moving average, with the next resistance at basically 200-day moving average, which is 3% higher. NASDAQ reacted also positively as well, but the index has yet to break above the 100 DMA that the S&P managed to do, and still has 200-day moving average resistance to contend with as well. But as long as both indices stay above the intraday lows of November 10, we would continue to label the U.S. market in a confirmed uptrend. And so I think every bit of data that we see going forward, whether it be CPI data or employment data, I think it's going to be critical in terms of predicting where the Fed is going to go. So if we get another reading in December 13 for November CPI reading, and it comes in lower than expected, I think the market has a chance to, you know, sort of get a year-end rally. So that's where we're sitting right now. Okay.
Dean, hi, good morning, and thanks for being with us. What about your view on the Nifty? Given all the volatility, we're still above the 100, 200 and 50-day moving average on the Nifty. So do you think that the uptrend is intact, and what are the levels to watch over the next couple of months?
Yeah, I mean, Indian market has been fantastic. We do notice that if you look at AAXJ, which is the ETF, Asia ex Japan, there has been a bit of a character change. So AAXJ has broken above the 100-day moving average, hasn't done that in quite a while. And it is kind of retreating a little bit, but I think that's an interesting character change. India, you know, continues to be on the confirmed uptrend path. We see next support 1% away at the 21-day moving average. I'm talking about the sensex. And as well, there's a 50-day moving average support, which is 3% away. The market continues to look pretty solid. I mean, last time I was on, I commented we should avoid extended stocks. I continue to see some extended stocks, but also glad to see a lot of stocks breaking out from early stage basis. So that's a great sign. It's a very healthy market. Plus, on top of that, you have oil prices kind of retreating, and as well as U.S. dollar retreating as well. And I think they're supportive of India as well as rest of Asia, in fact.
Hi, Dean. Good morning. Since you spoke about crude as well as the dollar index, where do you see both those two headed? It's very, very important from an India market perspective.
Yeah. I mean, for U.S. dollar, we see, it's sort of in a downtrend at the moment. We see next support at 105. That's sort of like the 200-day moving average. So if it breaks that level, then I think it could go a lot lower. But then if it reverts on the upside, we see 109 as resistance. So we're kind of in those two ranges. So we'll see how it goes. But I believe U.S. dollar is going to test support at 105, given the fact that, perhaps the Fed is going to start easing off in terms of raising rates. So that's usually, a better sign for the U.S. dollar to sort of back off. As for oil, we're currently at around $80 in terms of index. I think it's poised to downside support at $76 and then at 73. So I wouldn't be surprised if oil continues to go lower. If you look at the demand globally, for example, inflation in the U.S., if you look at the demand side, is only 1%. It's the supply side, supply-driven inflation that's the problem. And I think that speaks to, oil prices coming down globally. There's just not as much demand given economic cycles that we're in.
Yeah, I mean, that's true. But that's been true always, right, Dean? I mean, world oil demand growth grows, 1.5% annually. That's it. And that the pace of that increase is also coming off. Dean, a quick point on expectations of Fed starting to ease off, etc. The point is they may not, the pace of hikes may come off, but they may take it up. The rates may go up to 5 and then stay there for 6 months, right? Now that'll be painful for some time. So do you expect markets to react in anticipation of when the 6 months will be over, or only once the Fed actually starts to cut rates will markets respond? What's your sense?
I think first we have to deal with the data that's going to come through. So for instance, CPI data, if it comes in lower again in December, I think we'll get a positive reaction. And then, reactions from non-farm payroll, employment type data, if it comes in weaker than expected, then I think we're going to get a positive reaction. Also, I keep looking at inflation break-even data going forward. And, the bond market is expecting 2.3 to 2.5% inflation by the end of 2023. So if that is the case, then I would expect the Fed to, at some point, completely reverse and start cutting rates, perhaps, third quarter, fourth quarter next year. But market's going to be reacting well ahead of that. And so, I wouldn't be surprised if the U.S. market starts to accelerate sort of midpoint next year.
Okay, the U.S. market starts to accelerate midpoint next year. That's, I guess, an optimistic view coming in. Dean, always a pleasure speaking to you. Thanks a lot for taking the time out and speaking to CNBC-TV18. That's the word on the global markets and the local picture. They say India continues to be a very, very strong market, and perhaps there is more upside for the U.S. market starting middle of next year. All right, let's take a quick break on that note. Our entire team will be with us to help us prep for the trading day. Don't go anywhere.
Different ages, different stages. Get best protection with Star Women Care Insurance Policy. Always at your doorstep.
Play it, This is your space.
Play it your way.
With the versatile range of sanitary ware, faucets and tiles by Sarah.
Dadu,
Yes?
what does premium mean?
Beta, premium you can say is like petrol. The car will keep going till the time it has petrol. Once petrol is over, the car stops.
But Dad, this time even if the petrol is over, our car won't stop.
How come?
With LIC's Jeevan Labh, even after the premium payment tenure is over, the policy's benefits continue.
That means our journey of happiness will continue non-stop.
LIC, हर पल आपके साथ.
Welcome back. There are big events to watch out for as we head into the new month, which is the month of December. There's the US Fed meeting on the 13th and 14th of December. There's the RBI policy as well. So a lot of macro events, but let's talk about the here and the now. Our research team is standing by with CNBC-TV18's list of top 10 stocks for the day. Let's begin with all the action in Nykaa and delivery. And trust me, there is no dearth of action there. Vivek is with us to give us the latest. Vivek, good morning.
Well, good morning. You're right. The action continues as far as, the new age companies are concerned after the expiry of the lock-in period. So Nykaa, another block deal is expected in the session today. Sources tell us that Lighthouse India Fund, it's going to be a cleanup trade as far as that particular fund is concerned in Nykaa. So 0.65% of the total equity is expected to change hands. The price range of this particular block deal is actually between 180 to 183 rupees per share. And this is a cleanup trade. So, there won't be any supply overhang from this particular fund that owns shares as far as Nykaa is concerned. On the other hand, delivery, yesterday was the last day of the expiry of the lock-in, and immediately we saw a block deal happen. 2.5% equity changed hands. CA Swift Investments, that is the Carlyle Group, actually sold 2.5% equity stake. Remember, at the end of September quarter, they held a little over 5% stake, so they continue to hold around 2.5% stake. Among the buyers, one large buyer was Morgan Stanley. So I expect some action on both of these stocks in today's trading session.
All right, Vivek, thank you very much for that. So that's the new age companies where lock-ins are expiring and old investors are selling. Now, JSPL will be in focus on the back of tariff policy. Sonal is here to explain that to us. Sonal, hi, good morning.
Good morning, Prashant. Well, yes, PNGRB has gone ahead. They have notified the natural gas pipeline tariff regulations. They had made a draft in August and now it has become final. It is effective from 18 November. There are a lot of rules in that, but just pointing out the important ones because it is a technical document. Some of the important announcements are that there is discontinuation of proposal to share 50% of the proposed incremental tariff revenue. That meant that any new pipeline that had come up, though the tariff there had to be shared with other players. Now this has been discontinued, which means it is positive for brownfield network capacity expansion. The second is that earlier transmission losses were not considered. Earlier they were not, but now they will be able to be considered. And analysts expect this could be important for the earnings to the tune of 3%, both for the likes of GAIL and GSPL. The third one is there is gradual annual escalation in tariff versus a one-time escalation earlier. So that would mean every year there is some tariff escalation that will be announced for their pipelines. And this is positive for all these companies versus a lump sum tariff increase that the PNGRB would have announced. MK says that PNGRB wants entities to earn a reasonable rate of return, and channel checks indicate that these pipeline players are very happy with these notified regulations as well. And this will pave way for future expansion according to MK. And unified tariff, that is the other big trigger. It is likely to be implemented from 1st April 2023, and that would be the other trigger for the likes of GSPL and GAIL.
Okay, all right. Thanks a lot for that, Sonal. Well, let's hop across to Ekta. She's joining to tell us about Indico Remedies and the con call takeaways. Ekta?
Well, yes, they did meet some investors at the Nirmal Bang conference. So a couple of important takeaways. The growth in the US as well as Europe will be on the back of an order book of 150 crores each within these two geographies. The next 6 months, they're looking to launch 2 to 3 injectables for the US as well as a few ophthalmic products. Remember, injectables as well as ophthalmology products are much more difficult and, categorized as complex drugs in the US, and hence it's positive. They expect to receive a large order order for a particular eye drop as well. Now, in terms of India, 5% revenue growth is what they're targeting for FY23. This is despite a decline of 5% in the first half and despite growth despite a high base on account of COVID-19. The company is aspiring to achieve 5,000 crores in less than 5 years. They will look to do this via organic as well as inorganic opportunities. They're expecting 20 to 24% EBITDA in terms of a margin range.
All right, thanks a lot, Ekta, for that. Let's go across to Vahishta now. She's tracking some more stocks that are in the news. Vahishta, good morning.
Good morning, Sonia. The first that I'll be talking about is JK Paper, when they've acquired a majority stake of 85% in Horizon Packs and Security Packs Packaging, and the balance 15% will be acquired in the next 3 years. This is for a total consideration of 578 crores. Botswana has picked Jindal Steel and Power as the preferred bidder in a tender to build 300 megawatt coal-fired power plant for the company. Route Mobile will open a local sales office in Saudi Arabia and operate as Route Mobile Arabia Telecom, and the company gets a CITC license, which is mandatory to conduct a local SMS business. Jubilant Foodworks has incorporated a subsidiary in Nepal. This is to develop and operate Domino's Pizza stores in the country, and the company already operates Domino's stores in Bangladesh and Sri Lanka at present. Citi says that given the relatively smaller population and per capita income for Nepal, the store expansion will likely be slow and gradual over a period of time in the country. The last is Hindustan Copper. Copper prices have dipped overnight and slid to near 2-week lows, pressured by fresh COVID curbs in China, and prices have slipped nearly 10% from its highs in mid of November. Back to you.
Okay, thanks a lot for that. Well, fresh COVID curbs in China have definitely impacted the commodity universe, the crude universe, and it's having ramifications globally in terms of manufacturing as well. Here's a quick recap, though, of our top stocks and focus stocks with positive news flow. There's Nykaa, GSPL, GAIL, Indoco Remedies, JK Paper, JSPL, Route Mobile, and Jubilant Foodworks. While stocks with negative news flow, there's Delivery and Hindustan Copper. But let's find out the latest that's happening in the world of crude. Manisha Gupta joins in for her roundup of all the action there. Manisha, never a dull moment when you're tracking this space.
Oh, well, absolutely. And especially in case of the crude oil prices, where we did see 5% of a decline at one point in time overnight after reports suggested that OPEC and allies were perhaps looking at increasing production. But then came the rebuke from Saudi Arabia and Russia saying that, if anything, they're actually looking to cut production further, with Russia reiterating that they're not selling crude to nations participating in the price cap. So, well, a lot of back and forth statements there. Having said that, we did see the crude oil prices end the day nearly 0.5% on the higher side. That clearly is what we are seeing as in the mood in the Asian markets as well. It's all going to be about December 4th when you have the OPEC meeting on the kind of statements that come in from there. But yes, there is profit taking across other commodities. Metals have come off their November highs. The strength in US dollar and the rising China COVID cases clearly has had an impact. So whether it is zinc, nickel, copper, aluminum, all of these metals have started Asia on a weaker note.
All right. Thanks very much, Manisha, for that. Actually, the reason why the price moved so much is because it was such a shock. All year they've been cutting, and now Wall Street Journal comes and says that they will increase output. So it was just kind of, you couldn't believe it.
Came out of nowhere.
Yeah, so, I guess when something is so unbelievable and the Wall Street Journal puts it out, they say, well, this is going to happen, right? And prices reacted violently. But as we now know, that was not to be. But as Manisha is saying, that most likely there will be a cut, as what we've seen through bulk of the year. We'll sort of get you some corporate commentary now. HUL's chairman and managing director Sanjeev Mehta says that volumes in rural India are seeing some stress and demand may pick up once commodity prices soften. He also sort of added, he's also uncertain on future price hikes as they are closely linked to unprecedented global commodity prices, which are unpredictable as well. Let's listen in to some of his comments.
There is a stress on volumes in rural India. But the good bit is that the headline growth is still there.
When can we expect a revival in the rural economy?
There has to be a trigger. And one of the trigger will be when the commodity prices start softening.
Correct.
And when they start softening, I see no reason why the volumes won't come back. Difficult to speculate. It's very difficult to put your finger on because they are dependent on many variables. The good bit is that palm oil prices had softened in a meaningful way, though after coming down, they've again gone up a bit, but they are still below their peak. So I think one of the trigger will be if the Ukraine crisis gets sorted, then we should definitely see a softening of commodity price.
But then the sense I'm getting is that still a few more price hikes on the anvil because there is...
Price hike, I wouldn't like to say that there would be. It would really depend on commodity price. And remember something, there is no one-to-one equation between commodity price and the price of our goods.
HUL top boss cautioning a little bit about the rural volumes. We're expecting a strong pickup from year on. So interesting commentary coming out of there. For the timing, we'll slip into a short break. On the other side, Deepan.
Welcome back to Bazaar Morning Call. Well, for now, the SGX Nifty is indicating a minor green start. So let's see how things go. But there are plenty of stocks to talk about. So without wasting any time, let's get Deepan Mehta, Director at Elixir Equities, to join in. Deepan, good morning. I wanted to first ask you about what's happening in this whole platform space, right? Once again, there's large selling that's taking place in Nykaa. Lighthouse will be selling about 0.65%. In delivery as well, Carlyle will be selling. What do you do with the stock now? Nykaa is at 183. Does the risk reward look favorable for investors, or do you still avoid such names?
Yeah, good morning, Sonia, and thanks for having me on your show. The only silver lining in this entire selling is that actually the stock is being absorbed. Although prices have corrected significantly from their listing, the new investors are coming in with their eyes wide open, and they are also marquee investors. So obviously they see the future in these companies, which is why they are buying and committing such huge amount of money. So trends like this usually suggest that stock is moving from weak hands to strong hands, and that's always positive. I think a kind of a base is being formed in all of these platform companies. And as and when I think the selling pressure abates, you will see follow-up buying coming through from maybe retail investors, other institutions as well. Right now, everybody is just running scared because of the way the prices are correcting. But at some point of time, when they stop falling, you will see a greater interest and maybe some sort of a support coming through, and then they can build on that after that. But all in the end of the day, I think these are great businesses. It's just that the street and all of us got the valuation wrong. But these things tend to correct over a period of time.
Okay, all right. Deepan, yesterday we had done this interview with ITD Cementation, and the management is sounding very, very confident. I think you've had a look at that. I'm not sure whether or not we can play a bite. But tell us, what's your outlook on the infra theme? Not too many players out there. And, valuation-wise, some of these companies could look good, but obviously there are so many uncertainties. Your take on the company or any other from the infra space?
Yeah, good morning, Nigel. Yes, I did see the interview. And again, first, the disclosure that we and our clients have invested in ITD Cementation, and the stock has given excellent returns in the past couple of years or so. What we like best about ITD is the corporate governance standards. You see, the engineering construction space, there are many risks when it comes to corporate governance. There are risks as regards capital allocation as well. And many of the companies in the engineering space or construction space have committed huge capital to execute the projects themselves. And that's not the case with ITD. Also, it's a quality player. I mean, on the lines of L&T, although it doesn't take such large projects as L&T, but it's a quality player, excellent track record, and very sound management, which is based on engineering and technology skills. Valuations are attractive, and there's great visibility when it comes to earnings. So very positive on ITD Cementation. And even after this run-up, we feel the stock can do pretty well over the next 2-3 years or so. The kind of bids that they have put in, the kind of projects which are coming up, I think next they shouldn't have a problem as far as order booking is concerned for the next many quarters or so. And margins also are stable, gradually increasing as they pick and choose which projects are profitable and bid for only those projects.
I mean, if the turnaround does happen, it will be a big turnaround story, right, Deepan? I mean, they went through all that trouble a couple of years back in Calcutta, etc. All right, the two listings yesterday, Deepan, hi. So 5-Star and Archean, right? One is a largely bulk commodity company. The other, of course, is a NBFC. 5-Star, they had to cut the size of the IPO, but you look at the price action yesterday. Started 5% lower, and then at one point was up 12. Any thoughts on both these names?
Yeah, good morning, Prashant. Sorry to not having a comment on these two companies. I've actually stopped looking at the IPO market for the time being, for reasons being that we hardly get any allocation on the retail side. And then on post-listing, 3-6 months down the line, there's a great deal of uncertainty as to where the prices will be around. And then there's the selling pressure by investors once the lock-in gets over. So it's a bit of a confusing picture. These are great companies, no doubt, but if I see them 6-12 months down the line, maybe you would have a more informed view and maybe more accurate in terms of valuation as well.
Okay, so let's talk about travel, right? Something that everyone is interested in towards the end of the year. EaseMyTrip or EasyTrip Planners is on our radar after it was locked in 20% upper circuit yesterday. This as the stock turned ex-date for the 3:1 bonus issue and a 1:1 stock split. Prashant Pitti, who's the co-founder at EasyTrip Planners, joins us now to talk about that. Prashant, thanks a lot for joining in. I want to first start by asking you, the kind of demand trends that you're seeing, because now we are heading into the year end and trips pick up. And from your presentation, I'm just reading out, you said that gross booking revenues came in at a little under 2,000 crores, which is the highest ever that you've seen. Do you think you can do better than that over the next couple of weeks and months?
Well, firstly, thanks for having me on the show. Usually, there is a seasonality in travel industry, and quarter two, the quarter which passed by, is usually the weakest quarter. And if you see that, even though it's the weakest quarter, quarter one because of the summer holidays and quarter three because of winter vacations, do much better than quarter two. However, at EaseMyTrip, since we are a growing company, we actually grew our total business by more than 20% in this quarter, while our competitors saw their growth to be either flattish or slightly degrown as well. So as we are picking up the market share, the company grew. We certainly believe quarter three and quarter four should be better than quarter two in terms of total business.
Quarter three and quarter four will be better than quarter two, is what you're saying?
That is correct.
Okay, so when you're saying picking up your market share, can you tell us what is the market share now versus peers?
Well, our market share in airline industry on OTA space would be somewhere around 22 to 24% now.
OTS, sorry, Prashant, hi, good morning. What do you mean OTS?
OTA, online travel agencies.
I see. So online, basically online, the online booking, travel booking.
That's correct.
Okay, all right. And 22 to 24%. I mean, that's... and how has that come about in the last, say, 2 years, 3 years? I mean, where were you at and where do you want to go? I guess that's a more important question. Where do you want to be? Higher, sure, but any kind of definite targets in mind? And if you have a target, you also have a strategy to get there. Go on.
Absolutely. Well, basically, as you would know, that we grew this company bootstrapped. So we basically literally started from nothing. And in the last 14 years of journey, we have gotten till over here. And the company has grown profitably. Our target is in the next 3 years, we want to be the leading airline OTA in India, which would basically happen once we cross about 40% of market share.
Okay. Hi, Prashant. My question to you is, if you're going to be grabbing market share, you're going to do it organically, or is there a possibility you do it inorganically? And also, you told us that quarter three is normally better, right? Quarter two is a little softer. Sense on volumes, what do you end this year with? I think last year, which was obviously affected by COVID in phases, you did around 71 lakh. This year, where do you end?
I would talk more in terms of total bookings, which is GBR or GMV, sorry. Last year, our GMV was around 3,700 crores, and we have almost done 3,700 crores in the first half year itself. This year, earlier, we were anticipating to do somewhere around 6,500 crores as GMV. But now we have revised our targets and we would be touching 7,500 GMV, 7,500 crore, which would be more than double of the last year's number. That would be the total number. What was the other question? I forgot.
When you want to increase your market share, Prashant, so will you do it organically, or is it possibility you do it inorganically? Is plenty up for sale is what I understand, but depending on whether or not you guys are interested, or as it is by default, some of that competition is coming to you all. Go ahead.
So on the airspace, we're not interested in growing inorganically, since the growth is already happening organically and without spending much money on marketing. On the non-air space, which is hotel, bus, train, holidays, cabs, these are the spaces where we're looking forward to grow inorganically, and there are plenty of good, disruptive, profitable, tech-driven, asset-light businesses are available up for the grab for strategic acquisitions. The reason is that, in the last couple of years, these companies have changed their business model dramatically and eventually have become profitable, while their competitors are no more. Just because of the COVID, they could not survive. And hence, post-COVID, these companies are gaining tremendous amount of speed and gains, while there aren't that many VCs or PEs who are willing to invest in travel-related companies, which is why they are really, really lucrative on the side of acquisition.
So will you be closing in on any acquisition in this fiscal? And you do have cash of around 250 crores on your books. Will you be using a large chunk of that for acquisitions?
For acquisitions, we don't have to just use the cash which is available. We could also use the equity.
Sure.
We are looking forward to acquire a couple of companies in this fiscal year.
Okay.
Prashant, I have a question as a consumer, which I'm sure Nigel and Sonia also have, and lots of others also have. You know, I'll tell you, this is recently, at least my experience, and maybe it'll resonate with viewers watching as well. When you are actually on any of these sites, I'm not talking about EaseMyTrip, but any of these sites, when you try and book an airline ticket, right? And you enter in all the details and you fill in the name and the age, all of that, and then you say, okay, confirm. The price that the website showed you at the beginning, based on which you kind of said, well, let's book this, and the price which it suddenly jumps up to, there's a huge difference. I mean, it's almost as if the AI is working overtime to, and I've tried this now many times across platforms, and it's the difference is significant. Any thoughts, Prashant? What causes this? Yeah.
Well, you should use EaseMyTrip more often, Prashant. This is what I would say. At EaseMyTrip, we are famous for not charging convenience fees, which is the price which comes at the last leg of the booking, which is basically a multiplier of passenger. Most of the OTAs charge anywhere between 300 to 600 rupees per passenger as convenience fees, which EaseMyTrip does not if you're not using any discount coupon. So,
Prashant, but I'm not talking about the convenience fee, which we know. I mean, you'll get slapped on with a convenience fee. I'm talking about a big, sort of a big jump in the price overall.
So that probably happens because of caching mechanisms. If any particular OTA has cached the price, but at the time of the booking, at the final time of the booking, the price needs to be refreshed. And when you refresh the price, you fetch the new price from the airlines. The price might have changed at that particular time. At EaseMyTrip, we have a very proprietary caching system, so we see this as a very less amount of complaint on our portal. In fact, this is probably one of the biggest reasons why the company grew bootstrapped, is that our caching mechanism is something for which we are even applying patent for, and because of which consumers do not see the price jump as much as they probably see on the other side.
Okay, all right. Since we're talking about pricing, Prashant, and we get that point about being bootstrap. I mean, you all grew the business till you're listed. You didn't dilute any stake. So kudos to you on that. What about discounts? What has it been? What is it likely to be going ahead? And also, you normally give us the total market share. I think you gave us the online market share. Otherwise, it was around that 8-10% odd. In those terms, what is it at? Yeah.
So if I could give you a rough understanding of, if there are 100 passengers flying in the airplane right now, 50 would have used OTA and 50 would have used other mechanisms, which could be travel agent or airlines directly.
Correct.
So hence, if I'm saying our OTA share is somewhere around 22 to 24%, on the overall perspective, it would become around 11 to 12%.
11 to 12%. Got that. And your discounts, we are interested in that as well.
So, we actually did our biggest sale ever during the month of October only. From 5th October till 22nd of October, we actually gave very hefty amount of discounts, and that accumulated to the total business of about 550 odd crores in this particular quarter. Usually the amount of discount have gone down compared to last year. Last year, our average discount was around 4.5%. This year, the discounts in the quarter first was somewhere around 2.6%. In the second quarter, it was 3.1%. So we look forward to continuing with the same set of discount. The competition intensity is surely decreasing, because of which the discounting can go down.
Okay, well, I wish you told us about the discounts before they happened, right? I didn't know about that. Would have availed it. But I mean, jokes aside, your cost structure has been the lowest in the industry for a while, and you've managed to keep it low. You've managed to remain debt-free, have high cash as well. But now I'm noticing that, especially in this quarter, a lot of your expenses have gone up as a percentage of sales, whether it's employee, ad spends, other expenses. You think the cost structure could get a little more, could put a little pressure on profitability, considering how much of competition there is?
The employee cost did not actually increase if you look at it as a percentage of GMV. So as a percent, we look everything as a percentage of GMV. So the employee cost remains the same, which is somewhere around 0.6 or 0.7% of GMV. You are right on the marketing cost, though. The Q2 was a special quarter. For the first time, we did a huge branding activity by basically being the co-sponsor at the Asia Cup and also the road safety event. That directly, costed us somewhere around 30 odd crores, because of which, if you would see that, our gross margins were intact, but our PBT shrunk by about 13 crores. So, instead of having PBT of somewhere around 55 odd crores, we got the PBT of somewhere around 39 crores. But this was a one-time exercise. We definitely got a lot of mileage around it. Almost about 49 crore people all across India watched the Asia Cup, which had 2 India-Pakistan matches in it. So we were anticipating the third one as well, but that didn't happen.
All right.
But yes.
Okay.
All right, Prashant, it's a pleasure. Thank you very much. And do give us a shout when you're opening up discounts. Thanks very much. Great to have you with us here.
He said discounts will continue.
Will
so
continue.
Just FYI.
But airfares are crazy, right? I mean, across the board, even the most flown routes, Delhi, Bombay, etc., through the roof. We'll take a break here. We are back on the other side with Sudarshan Sukhani, Mitesh Thakkar, who are with us to give us their technical setups and individual stock trades as well. Stay with us.
Your health is our concern. Choose network or appropriate hospital. Our telemedicine and customer care team are available to guide you. Star Health Insurance, always at your doorstep.
दादा आप फ्लाइट कहाँ बुक करते हो? इक्सिगो ट्रेन इक्सिगो बस इक्सिगो साइकिल इक्सिगो ज़्यादा बोलिए बड़ो ज़्यादा बोलिए और कौन सा ऐप डाउनलोड करना चाहिए? इक्सिगो और निकल लो
Presenting the next challenge between two animals.
Who seems faster amongst the two? Then why place all your bets on the elephant? Similarly, in investments, horses are like smaller companies. Even with ups and downs in the journey, they can run faster than the elephant like big companies and show higher potential. Along with investing in the horse, what if you also get tax savings? That's right. Introducing Samco ELSS Tax Saver Fund that aims to create wealth for you by investing in high-quality small and mid-sized Indian companies and also helps you save tax with ELSS. Invest today. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Welcome back. You're tuned into Bazaar Morning Call here on CNBC-TV18. Well, for starters, the SGX is suggesting maybe some green. Overnight, the US markets were a little bit subdued. Getting into this Thanksgiving week, it's a truncated one for them, so volumes as well on the lower side. But how do you approach trade? To get that perspective, we are joined by Sudarshan Sukhani as well as Mitesh Thakkar. Good morning, gentlemen. Thanks so much for joining in. What do you do this morning? Last few days has gone to the bears. Do you expecting a bit of a bounce? And if yes, what's the trade on the Nifty? Sudarshan, you go first.
Yeah, good morning. See, we have seen a trading range and a breakdown from the trading range. Now, it's difficult to say how things will pan out for the next few days. It's much easier to say what we should do today. Sometimes the short term is easier to identify. I think we can anticipate a bounce back today. That Nifty has made some kind of a low. Anything above 18,200 for the Nifty, for the cash Nifty, becomes a buying opportunity. So the trade is to wait patiently for the first hour or so. If the Nifty is trading above 18,200, go long, keep a 75-point stop loss. Now the question is whether you want to carry this position. That answer you will get only when the markets are closing. You have to watch the European markets, American futures at that time and decide. But you should go long in the morning. The Bank Nifty is a much better proposition. Yesterday, it had a very narrow range day. I think that narrow range is breaking on the upside today. So anything above 42,400 is a buying opportunity for the Bank Nifty. And you may also like to carry it if it is closing strong.
Okay, Mitesh Thakkar is also joining in. Mitesh, what's your view on the Nifty itself? Do you see this level of 18,200 be a bit of a hurdle in the near term? What's the way to approach it for the rest of the week?
Good morning. So we have been kind of maintaining that the markets might get corrected because the intraday and the hourly charts have been slightly on the negative side. Though the overall structure isn't, undisturbed, but I think it looks like a situation when there's some kind of profit booking happening in the indices, and therefore pull back to the key medium and short-term averages could happen. We maintain that we'll look to explore buying in the Nifty around 18,020 mark with a stop below 17,950. I think that's the area to enter. Till then, I think the market will see some kind of supply emerging at every bounce back, and therefore trading the Nifty may not be very profitable if you get in somewhere in the middle of the range. Alternatively, I think it needs to break above 18,400, 420 to give a breakout, and that's still a couple of days away. So I think for the timing, the idea is to wait for the dip to play out properly. It's been happening for the last couple of days, and if you get a level of around 18,020, 18,030, that's the time to possibly be aggressively on the long side.
Okay, what about individual stocks then? Mitesh, what's on your list today?
I have 3 buys and a sell. Escorts had a big breakout yesterday, and even if there's some profit booking, I think this stock should be bought into. It started a trend which could see it head towards 23.30. This stop loss should be below 21.30. A buy on BPCL with a stop at 305 for targets of 322. And a buy on IEX. It's a conditional buy. It needs to clear 147 as the pivot level. It's trading around 146, 145 half. So buy above 147.20 with a stop below 145 for the first target of 153 half. And sell call on Grasim with a stop at 1706 for targets of 1630.
Okay, all right. Sudarshan, what about you? What are the picks you have?
Well, it's more on the bullish side today. Balrampur Chini is a buy. The stop is 350. The stock has actually been rising from 300 to 340. It's already at 350, 355. So there's a sustained uptrend in this bear market. That's good news. That's a buying opportunity. BPCL is a buy. Now, the BPCL stock has been in a narrow trading range for almost 2 months now. A trading range needs to break out one way or the other. Expecting an upside breakout, keep a stop under 302 and look to buy it. ICICI Prudential is my only intraday short. Short selling should be done only intraday. Keep a stop at 480 and look to short it. And finally, Torrent Power is a buy. Again, the stock has moved from 480 to 520 while the markets were chopping around. And there is a strong relative strength, good momentum. Buy with a stop under 508.
Okay, thanks a lot for that. So those are a whole host of ideas coming through. Dipan Mehta is still sitting by with us, so let's get a quick comment from him. Dipan, your thoughts on the EaseMyTrip stock? I mean, the management was very confident about the growth there. Bookings are at an all-time high. Is it worth still buying into?
Yeah, well, it is certainly expensive, Sonia, but what really caught our eye was the fact that during the pandemic, this company reported profits. I think it must be the only company in the travel industry globally which was able to report profits, no doubt from other income or whatever. But they run a very tight ship, and the cost structures is what we really appreciate. Maybe at correction, when you get it at a reasonable price to earnings multiple, you could look at this company. It's going to be a steady, secular, compounding growth story. And the way the travel industry is, it's very difficult to set up a new travel portal now. So there's going to be more and more consolidation, and that will benefit a company like EasyTrip Planner. So generally positive on the company. It's only thing that it's on the expensive side. So you'd like to wait for a bit of a correction.
On that point, Deepan, I was thinking, in insurance, they're an aggregator, right? They allow you to compare the best fares, etc. In insurance, who would have thought that suddenly, IRDAI wants a portal set up like Bima Sugam, backed by private insurance, mind you, right? And they're saying, we'll cut commissions, and there was always Policy Bazaar, which was the leader in that space. It's obviously, a wild thought, but the parallels are quite clear because, the same kind of business model in terms of aggregation, allowing you to compare, finding the best fare, what works for you. So convenience is basically what the OTAs bank on. So who knows? But yeah, take your point. I want to read out a specific quote on these new age things that we were talking about. This is Samir Arora of Helios, and we have this quote up. And it's an interesting way to look at it. And Deepan, you commented on this earlier, but I don't know if you have any additional thoughts. I want to read this up. We can put this up. Samir says, just because PE funds and pre-IPO investors can sell their shares after their lock-in ends does not mean they have to necessarily and compulsorily do so. So they don't have to do it just because the lock-in is ending. Selling by them soon after lock-in's end is a reflection of their view on the companies and not just a liquidity-driven event. So it's not just a technical liquidity event, and so they have a choice to stay on, hang on. There's only one exception I can think of is when the fund life itself is ending, right? And you have to liquidate to return money back to LPs, etc. Any thoughts on that comment from Samir? Go on.
See, Prashant, all of these private equity investors have made very good returns on their investment. And if that's the logic, then no private equity will ever sell any profitable holdings. They also have their compulsions and their selling strategies. So if they feel that they need to book profit, then that's perfectly fine. I'm looking more on the positive side that whatever they want to sell at some price point did get absorbed, and that speaks volumes of the kind of depth which is there in our capital markets and the kind of interest which is shown by a whole host of global foreign investors into buying into Indian equity. And the new players who are buying into these companies, they are going in with their eyes wide open. They have seen the correction in the price. They have analyzed the business model far better. They have seen the brief history as far as listing is concerned. And they have a 3-year cap of a view. And they still expect these companies to do exceptionally well and create value going forward. And I think that's all we can take from this. Professional investors have that compulsion when it comes to selling. So there's nothing to be perturbed about the wave of selling which we are seeing over here. Fact is, it's being absorbed pretty well. And I do feel stock is going into stronger hands.
Okay, Dipan, thanks a lot for joining in and have a great day. Thanks for speaking to us about a whole host of stocks. We'll slip into a quick break. On the other side, we'll come back with the pre-opening. We'll also have Karan Taurani of Elara Securities to put focus on these new age companies that we just spoke about. All about the recent exits in Zomato as well as the Nykaa block deals coming up.